Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. I said 2 weeks ago and then requoted it last week, and I quote it this once again. Here goes. This one has been a harder market to fathom compared to the others today. End of quote. Well, the changeover gap 2 weeks ago made it just that little bit tougher. Originally, I had referenced this to how we'd seen a monthly key reversal down in November last year, which was immediately countered with some remnants by a bigger key reversal up in December. This big gap just made it harder on continuation charts. I suppose I shouldn't really complain, as I've seen gaps like this before, and even bigger ones. Those who follow my Paris Milling Week commentaries will know what I mean. But it does make life a little more awkward on what was an obtuse market to begin with. Anyway, let's look at what we've got. So, prior to the changeover gap, we had an indecisive doji cross 2 Mondays ago. Coming as it did after a straight run up from the prior Tuesday's indecisive doji cross. That happened at the recent lows. I suppose one could look at this as a type of clue to the subsequent action and events, though I think believing that is a bit too much of a stretch. Anyway, the gap lower had been halted at the combination of the optimized February 2021 today uptrend currently at 611.25 and the rising long moving average currently 604.5. This is still where the market has been halted, and interestingly where we have seen some base building taking place. Personally, I favour the rising long moving average as being the more influential in this halt and base building than the former. As I said of the action last week, and I quote, and it's a long one, this leads me to believe that perhaps, just perhaps, this might be a base of action, and I would be very interested to see if it is maintained. Should it be broken, then the next supports below would be the 50% Fibonacci line of December 2020 to January 2022 move at 582.25, which is just above some congestion from August to September last year, between about 550 even and 574.25. Within that congestion, we have the March 2021 today uptrend currently at 571.25, and the neckline currently 561.5 of the April to June 2021 head and shoulders continuation pattern. The base of the congestion also has the 50% Fibonacci line, the big old February 2016 to January 2022 move at 552.25. It'll be interesting to see how we go forward from here. And that's the end of a quote. That is one long quotation, but it is still true today as it was last week, or may be the way forward. Winnipeg canola. There is little to add here to the commentaries I've made for the last 2 weeks. We have a somewhat uncommon, to me at least, pattern being organized here since early November 2021 and up until today. It is a sideways pattern and is known as a rectangle pattern, currently at 945 even to 1038.60. I'd highlighted this pattern a few times now, as it has an axis seemingly around the May 2021 high in the 107-108 area. Interestingly, the move lower in early January was halted just ahead of the base of the rectangle by the rising medium moving average, currently at 970.5, which caused a combined daily key reversal up and bullish engulfing pattern 3 weeks ago. The May 2021 high then capped the market on a closing basis, really until this week. Today we are moving once again away from the May 2021 high, propelled by yesterday's combined outside day and bullish double. But we still have a little way to go to reach the top of the rectangle. To finish off, I think, really, I'd like to discuss the outcomes from this possible rectangle pattern. At first glance, it looks like a topping pattern. However, that is not necessarily the case, as such a pattern could also be a continuation pattern. Overall, the chances of a break higher, interestingly, run at about 65% of the time, which seems counterintuitive. Nevertheless, that is what the data indicates. Additionally, breaks higher perform much better than breaks lower. Now, I'm not yet minded to place targets, not just yet. But to give you an idea, a break higher could see a potential move up to the 1111 area, while the break lower could see a potential move down to the 895 area. One further point. If we see a determined break either lower or higher, and then prices revert back within the rectangle, in other words, a false break, then there's a very high chance that the market will move in the complete opposite direction to the original attempted breakout. The chances are something like 7 to 8 times out of 10, so be wary, and please just remember this, if nothing else. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the color changes on the labels in the daily chart. There's no special significance to them, it's just my charting system playing silly buggers. Anyway, the long-term feature to look for here is one that I've droned on about for months and months. It is the January to June 2021 bullish Andrews pitchfork. We have most recently seen action around the middle time, currently at 56.20, when we saw prices close over it 2 Thursdays ago, for the first time since November last year. As you can see, we are still well within the bullish Andrews pitchfork, and it continues to dictate the bullish angle of attack. A new feature since mid-September is a nascent bull channel, currently 59.20 to 46.88. Now there seems to be some traction with this pattern, as it now already is seemingly a 4-pointer. It is at a similar, if slightly lower, angle of attack than the tines of the bullish Andrews pitchfork. Last week was a shortened week, so we have some interesting patterns as a direct result of this. For starters, this week the market made a new all-time high, which was anchored for a second consecutive week on the upper bull channel line, currently at 59.20. Interestingly, the move up came once again to a halt at the lesser 61.8% Fibonacci line at 58.65. Thus, we created a double top over last week and this. Now, on top of this, because of the foreshortened week last week, Monday's action alone set up the situation for a possible weekly key reversal for this week. Even yesterday's key reversal up, prompted by the market coming too close to the old October 2021 high of 53.26, has not been able to negate that idea. So if we close tomorrow below 57.49 or above 57.90, then we'd be on. Right now, we're looking at a weekly key reversal down, along with a bearish double top. However, I would not hold my breath over it, as we are still within some long-term bullish patterns. Finally, just looking below the middle time, and apart from the last October 2020, the late October 2020 high, 53.26, please keep an eye on the following just in case. The broken October to date downtrend, currently at 51.66. The rising short medium moving average, currently at 51.72. And the area around the gap left behind 3 weeks ago, plus the medium moving averages, currently at 50.77. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.